So guys, welcome back to ICT Trading Concept. If you have already watched my first video, the first part of the price action, how to actually read the price before before the entry setup. Here is the second part, and this part is also self-dependent. So if you just watch this video, then you will also understand the price action. But this is gonna be the the evening price action from Thursday, 12 October 2023. But if you just watch the first part, then it will be easier for you to understand whole price action of that day and how you will actually read the price before the trade setup. Okay, so here is the daily chart, and also this video is gonna teach you how to read the price action before the entry. Okay, before the entry setup. So this is the daily chart actually, and you see this is the daily fair value gap. So price actually trade over there. My overall expectation is market will go toward this sell side liquidity. That is my overall expectation. So when price actually reach to this daily fair value gap, now my expectation is it will go lower. Let's go to the lower time frame, and if you come to the 15-minute chart, I described how to utilize this fair value gap for taking long. Okay, so now I'm gonna talk about the price action over here, and the breakaway gap, how it will act. I will describe this breakaway gap to my next video. In this video we are going to learn when price will take the liquidity, how it will reverse from there. Okay, so from 15-minute chart you can see easily it has actually taken the buy side liquidity from here and traded to the daily fair value gap. This is the daily fair value gap, and here is my liquidity. I will just mark this one. This is my sell side liquidity. Why this is my sell side liquidity? From previous video, you know that it has actually taken this sell side liquidity, then I got the market structure shift from here, and then I have used this fair value gap. But in this video I'm telling you that this is the sell side liquidity. Now why? It's because when market actually came here, that was the shallow run. Shallow run means there is just a little weak, it just came lower and went higher. So this is the shallow run. Whenever you will see this type of shallow run, you will mark this as your liquidity. This is the relatively equal low now. So this is the most obvious liquidity, like the liquidity was here before, the relatively equal high. Okay, right now you have the liquidity over here. So if you just mark this low, this low, that is actual low, your drawn liquidity. Okay, I will just mark it over here. You see this low and this low, they are relatively equal low. Now let's go to the 1 minute chart. I will discuss how you will read the price before the before the trade entry. Okay, so that was the whole price action from morning. Then we had the lunch from, I think from here, yeah, that was the lunch hour, and we are just before 1 p.m. Okay, the just before the PM session. And before PM session we actually don't do anything in the lunch hour, and I don't want to talk about this because our setup was over here. I already described everything over here. Now we will go over here. Before starting the new work PM session, I would like to see what price did over here. So when price actually went through this buy side liquidity, this from the 15-minute chart. So when price went above the buy side liquidity and tapped to the lower part of the daily fair value gap, it came back. Where it came back? It came back to this new day opening gap. Okay, it traded over here. One time actually it went through this gap, but the very next candle it went through this gap again. Okay, so price actually respected this new day opening gap, and that is my point. To whenever I tell you to mark the new day opening gap, why I do that, why I recommend you to mark this new day opening gap. Look at the reaction from the new day opening gap. Okay, so price actually lastly it went higher again, and it has cleared the buy side liquidity. If you just mark this one, it has actually cleared the buy side liquidity. This is also a shallow run, but I think it will actually clear the buy side liquidity again, but not now, maybe later, because from weekly chart our prediction is market will go lower. I will just remove this buy side liquidity because that is no more important. Okay, so it has cleared the buy side liquidity and price is just over here, and we are just before the new work PM session. I'm using the reply mode. and let's see what happened. Okay, so price went lower, it went higher again, and if you look, there is one, remember guys, this is 1 p.m. that means our PM session is will be start from here, just from here. Okay, before 1 p.m. we won't take any kind of entry, we will wait until 1 p.m. So let's go what actually price did. And okay, so in that case, what price has done actually, so it has cleared the buy side liquidity, then it has given you a very nice market structure shift. Why you are expecting lower price? Because market actually went higher, it cleared the buy side liquidity, then tapped to the daily fair value gap. When you saw that it has tapped to the daily fair value gap, you will expect some kind of reaction to the lower part, and where you have the clear sell side liquidity over here. Look at the sell side liquidity, this is your sell side liquidity right now. So this all the relatively equal lows, lot of sell side resides over there, so you will expect market will go lower, this is your expectation. Okay, so just before the PM session, price gave you this nice market structure shift after clearing the buy side liquidity. This is your market structure shift. Okay, so when you have got this market structure shift, yeah, some of you can ask me, brother, there is your market structure shift, there is your fair value gap, and when price came over there, why didn't it take my entry over there? It's because it was just before the PM session, it was inside the noon. Okay, so 12 p.m. to 1 p.m. that is the New York noon session, and we don't take entry in the at the noon session, we wait for the PM session. So just before the PM session, I have got this nice market structure shift after clearing all of the buy side liquidity from there. We were waiting over here to understand what price will do. Okay, now if you look at this gap, okay, this is the lowest gap to this candle, this is the lowest gap. We will see how this gap will work. We won't target our profit over here, we will actually target our profit over there. Okay, I will show you, just wait. Okay, this is how you will read the price. First, you saw that market went higher, take the buy side liquidity, this is the highest buy side liquidity it has taken. Before here, price actually take the buy side liquidity here from, I mean the buy side liquidity, this equal highs it has taken over here, but that was on the morning session. I am not talking about the morning session, I am talking about the PM session. When I have got this market structure shift, where is the fair value gap? There is your fair value gap. Okay, you will wait until the PM session. If you see something at when price will be inside the PM session, if you see price actually trade this fair value gap, you will take a risk, I mean you will take an entry, I mean after just one. Okay, this is one, so you will take your entry, your stop loss will be above this swing high and your target will be here. Why here? Because this is the lowest fair value gap. That means if market would like to go higher, it will retrace from this fair value gap. But overall our idea, I mean our target is this relatively equal loss, that means this sell side liquidity. We will see. Okay, now just let's little bit further. So here is just 12:59. Okay, we are not even in the PM session yet. Okay, the very next candle, this is our entry, I mean this should be our entry, because this candle opened, it has traded the fair value gap and it went lower. So, and if you are not take your entry over there, the very next candle you could take your entry over there as well. Okay, so that should be your entry and your target will be here. But for me the safest place is here, below all of these lows. You see all of these lows, this is the safest place to take your I mean to put your target profit. But if you would like to take some risk, you can put your profit target over here, but you will take some partial when price will go below these lows. Okay, so let's see, price went through this and this. Okay, so you have done your job over here. Now this, what I told you about this gap, this is the lowest gap. What it should do, it should, I mean when price will come here, price should respect this and it should go higher. What it has done, it went through this gap. Now I will look the consequent encroachment of this fair value gap. Okay, I am just telling you the price action. your entry setup was here. Before here, all of this were you are actually reading the price over here. Now this is your time to read the price, how this gap will react. Okay, you mark the consequent encroachment. Now let's look at the price. Actually, I don't want to see anybody close above the consequent encroachment. If price would like to go lower to this sell side liquidity, I don't want to see anybody will close above the consequent encroachment. You are reading the price. Okay, so you see actually price went there, body closed over there, the very next candle body actually opened over there, went lower. Now look at the price over here. So from this two candle you got almost sure that market didn't want to go above the consequent encroachment. So when you have seen this candle, it rejected from the consequent encroachment. If market can touch to the lower part of this fair value gap, you will try to take your entry. Unfortunately, price didn't give you the chance. No candle didn't touch the lower part, so you missed this entry. So and finally price went lower. Just let me see where it has done. It has gone actually. It was over there. Let me go to the 15-minute chart. It will be easier to show you. Okay, so here. Okay, so price has taken the sell side liquidity. So you didn't get your chance to take your entry over there. Instead of that, your actual setup was over here. How do you know that market will go lower? When you have seen price actually went above the buy side liquidity, the liquidity level I just removed from here, and then tap to the lower part of this daily fair value gap. This is the daily fair value gap. You are expecting that market will go lower. And how do you know market will go lower? After clearing the buy side liquidity, it has given you a very nice market structure shift just before the PM session, starting the PM session. Okay, so you will wait until the PM session. You have the setup, but you are not getting right time. When this is the right time, after 1 PM or at 1 PM, you got this chance. This candle went to this fair value gap. This is very nice fair value gap. After the displacement, you will be in this you will be in this trade. Okay, and your entry will be here, your stop loss will be here. Now brother, you can ask me, what if it went higher and take the buy side liquidity again? Yeah, you will take a loss. I am not telling you that you will get every time you will be right. I am not telling you this. I am telling you this, you have to read the price, you have to understand the price, what it actually willing to do. Okay, when you will see this clean sell side liquidity and price is rejecting from the daily fair value gap. Okay, this is the daily fair value gap low. If you go to the 15-minute chart, not 15 minutes, I'm sorry, if you look at the 1 hour chart, you see nobody close even went above. This is all the week. This all week are telling you that we don't want to go above, we want to go lower. Where this is our sell side liquidity, we would like to go and take the sell side liquidity. That is our target. Okay, so this is the theory. This is the way you will start to read the price over here, and you will frame your or trade at the time. When the time will come, you will frame your trade. Okay, remember what I told you in the morning session. You will read the whole price action over here, then when 9:30 will open, you will frame your entry. After 9:30 you will start to frame your entry, you will start to look for your entry, but before 9:30 you will read the price, what price would like to do. This is over here, look at over here. You will wait until 1 PM, you will read the price, what price would like to do. It is where it should go. When you saw this market structure shift, this very nice setup 22 YT model, you will wait until 1 PM. If you don't get any chance to take your entry before 1 PM, you won't take your entry. You will wait until 1. When you will get your time, get your chance inside the PM session, you will take your entry. And I told you already where your target profit will be. Okay, when market went through this fair value gap, this is the lowest fair value gap of this leg, you will read the price. Is it able to go above the consequent encroachment? This is the fair value gap theory, guys. You have to understand the fair value gap. If you understand the fair value gap, you will be the winner, trust me. So when price went to the consequent encroachment of the fair value gap, and rejected from there, you will wait that market will go back to the lower part of this fair value gap. You will take your entry over there. Your stop loss will be here. When you will take your entry over there, when you have very clear sell side liquidity. Okay, if you don't have this type of sell side liquidity, I mean relatively equal lows or clean lows, here you can't take the risk. Here you can't take the risk. Why? Because you don't have the clear, I mean drawn liquidity. So here you can't take your risk if you didn't see there is a very clear buy side liquidity. First you have to mark some equal highs or relatively equal highs, equal lows or relatively equal lows. When you can mark them, you can easily take the risk. Okay, so actually unfortunately price didn't give you the chance to take the entry over there. I mean I also didn't get. So that is the second part of the price action. I hope it's gonna be clear how to read the price before entry, and when time will come how you will look for your entry. Okay, so that's all for today, and I will talk about to my next part, I mean the third part, how this I mean the I fair value gap will work. Okay, this gap, how you will use this gap. This is the fair value gap, I mean the breakaway gap. In my next video I will talk about this entry. Okay, so until then, cheers. And if you're new, please don't forget to subscribe to my channel. If you really love my content, please give me a love, a like, and comment below. If you don't understand anything, I will try to reply you. Okay, see you guys, bye bye.